All right, good morning, everyone. This is Dan coming to you for a trading room session on my sister's birthday, actually, March 24th, 2020. Good to see you guys. How you doing this fine morning? Make sure my speakers are up. There we go. Definitely had a lot of overnight activity. We were limit up on futures trading. So instead of a limit down, we hit a limit up again. And we are close to a potential limit up on the cash index too, so we're keeping an eye on that. Let me know you guys can hear me all good and you can see me. I'm on a different monitor today, so I think this one will work better for you. We did a little adjusting. Keep the coffee close. All right, so looking at quickly, I put in some levels for ES trading. Hit it to the short side, pre-market. Then I got in the middle part where I don't trade, and then I had a little quick one to the long side. So we're going to be documenting these guys for you. Good morning, Voltaire. Good morning, Andre. Good to see you. Now we're back inside here, so I'm not trading, and obviously running the room. I don't trade very often, especially we're close to limits, so no more trades for this guy this morning. Anyone have any trading activity? And I put just for watching purposes, the VA here, definitely a major move up. If anybody took a VA long today, I would definitely be capturing those profits as we are way past normal limits as we have been for the past couple of weeks. So nothing crazy new there, but just a warning, if you aren't a long, I would definitely capture those profits and take them off the table. Look at this first 5-minute bar here. We had a 0.83, so almost a 1% move in the first 5 minutes. So followed by a 30.39. So we're over 1%, and that's obviously a hard rule to be exiting and taking profits too. So I have not been taking the VA trades, and we actually stopped doing the TSAs during this extreme volatility because it's not as predictable as it was in the past. As I pull over the VA spreadsheet, for anybody that hasn't seen this, don't fall off your chair. This is absolutely fascinating and mind-blowing at the same time. Looking at this spreadsheet here, we're at -40 as of yesterday on the cumulative bell curve. The ratio has dropped all the way down to 2.653. It had never dropped below 3 until it hit it. Now it's just kept racing on down. Cross-column bell curve is at a -64, and the oversold is 3 digits now. So we are so far to the downside. That's why I have taken this off the table for my strategy right now, because we are at such an extreme that you can't predict when it may turn around. We did have a couple days up here when we had the binary trend changing over, but it never did follow through. It only made it back to 0. We never went positive on the bell curve. But here's a red 0, so we bounced off 0 twice and it went right back down. And we went down like we've never seen before. So these are unprecedented times in the regular market as well as the VA trade itself. One day, over 3%. Look, if we add this up, almost 13% in the last 2 weeks of trading, 11 trading days. So obviously, if you were short the spread, you're doing fantastically awesome. You have more cojones than I do to hold that in this marketplace. I would not be holding things overnight right now, personally. With all the limit activity we've had, it's just not wise in my opinion. Now looking at today, we took advantage of the quick opening. Looking at the internals, we're definitely trending toward a true trend day to the upside. We see we opened up well above positive 2,000 here. We're at 2,500, and on the up down, or excuse me, the advancing declining, which shows up in the $sign add symbol that Toss came out with. And the up down volume is stair stepping up. The originals are just buried to the positive, 93 up in the 90s. So everything is strong, but we are also so far up that we could have a pullback and it would still stay higher. So if I pull over some cash index numbers, we see the major gap up It's not even on my screen. That's how high we've jumped. They're attempting to get back up to 20,000 again, where we dropped down to 18.2 has been the low just yesterday. And it looks like Dave's busy in the RTES update room, so that's why he's not joining us yet. For those that don't know, we have the Slack channels, and that's Dave talking in the Slack channel right now. Maybe we'll take a look and see what he's doing. Make sure it's not something I'm missing out on. Maybe he forgot about us, as he hasn't joined us today, so Dave's a busy man. Looks like the president was hinting at closing the stock market for a week starting next Monday. So definitely don't hold anything over the weekend. That's the first I've heard of that. And it looks like he took some trades. I'll hit him online to see if he's going to join us. He'll be like, oh, it's Tuesday. I totally forgot. All right, so we'll see if he answers or not, or what he's doing. He might be too busy. We'll pull over the SPX here. What are we at? We're at 6% up. We just crossed. I believe if we hit 7 on that, we're going to get a limit up and the market will halt. At least that's the way it works on the downside. So we'll see if they're playing by the rules today or not. Obviously, we see the the bullish herding joining in here, obviously, with the up move. VOP curve. Gary's coming in. Good morning, Gary. He was just checking with Dave, so maybe Dave will follow him in here. So yeah, we see everything is just buried to the upside right now on all 3 indexes. The Dow, the SPY, the NASDAQ. So if we do get a pullback, it could do that without these going severely negative. So that's one thing to be careful of when we get these big gaps either way. That's one thing to keep in mind. I have seen that. If we do turn around and drop, that is another major sign of a weak market. So let's hope well, obviously we know the market's weak right now, but just for further activity, that is potentially possible. But right now, everything is to the up. But be careful taking any longs if the market does halt. All right, move that one over here. Yeah, it's not no more strong moves to the upside. Who do we have? I had someone emailing me. Oh, speaking of which, if you guys haven't seen, if you're not in the Slack channel, definitely get in there. And you can find out where to join it in the members area. If you guys don't need it, let me see if I can find it here. I'll put the link in. We had a member that was working with TDA, the Thinkorswim folks, since they bought it years ago. A script that shows, see, Dave's coming now. The SPY minus VIX. So what he did is he worked with TDA. Let me find my SPY VIX chart. And we've been watching it just in the charts, right? Just by drawing in SPY minus VIX. He worked with them, and Toss came out with an indicator. I'll make this bigger so everybody can see it huge. They named it SPY versus VIX _ market risk. So what it does is it puts it in a lower indicator here. So now you can just have this put on your, maybe just a SPY chart. I just put it on this chart just to compare it, and obviously, yes, we are turning up. The VIX is completely crushing down. All that implied volatility is coming out of the market right now, which is also leading to the turnaround. So we see the lower than almost ever before. I have this on a daily. Let's go to the monthly to pull in 20 years of data. Boom, monthly, there we go. And then I don't know why Toss always wants to put in so many extra days. It's one of my favorite features I've ever had. I don't need 361 bars, thank you, sir. Apply that, go away. So there we go, there's another. So that was the 0809 on a monthly chart. That went down to negative 2.5. So if we looked at this on a monthly, yeah, we do have a recovery day today, but we are definitely not out of the woods yet. We have not turned around on a monthly. So those daily turns, and we've seen that the last couple of weeks, right? Whereas, yeah, we can have 1,000-point swings either way. Today, the swing is to the upside. So looking at the monthly end, welcome to our latest. Steve and Dave, good to see you this fine morning, sir.
Good morning, everybody. Sorry I'm late. I was closing out a couple of long positions.
We saw your Slack channel activity. I'm like, so see, Dave's busy over there. He'll be here shortly.
Yeah, I'm sorry. Yeah, I just needed to focus on getting those positions closed out.
Oh, no problem whatsoever. I was just showing the guys the new indicator that Steven came up with. So, Steven, if that's
Yeah,
thank you, sir.
yeah, that is pretty awesome. I like it. I like it very, very much. That's it takes all of the guesswork, takes out all the spreadsheet work. I mean, you just got a single indicator there that you can really use to determine those buy and sell areas, those oversold, overbought areas.
Yeah, so you don't have to do the math anymore. It does it for you. So we know right now it's at 4.32 on the monthly chart. And I was just showing them the differences between the daily and the weekly and the monthly and all that good stuff. If I come back to daily, we've obviously made a turn, but that doesn't show that we're out of the woods yet.
No, I mean, it's been under 10 a couple of different times, as you can see. Until it breaks out through that 10 area, you're probably better off just kind of using it. I mean, you could use it as a short-term oversold indicator maybe, but
yeah, as long as you're in and out quick is the only thing. Don't hold
yeah,
anything long-term yet.
absolutely. We're not out of the woods on this decline. You know, you look at that sell-off there on the daily, this is typically not how a market will begin a new long-term rally. Yeah, I like that indicator. Is this Stephen in the room that created it?
I'm not sure. I was just going to ask him that. I know we have a few Stevens, so
yeah,
you can let us. It's not him. Okay, it's a different Stephen.
Yeah, it was very kind of him to put that together. Really appreciate it.
So for those that don't have it yet, I did post it in the Slack channel. It will also be going up on the member site in the download section later this week. Yeah. So if you're in the Slack channel, grab it there right away, and then the website will be updated later with it. I don't know exactly which day. I'll do it as quick as I can.
Absolutely. Good stuff.
Yeah.
So you cover cover everything today so far, the markets, and you know, this is it's just unprecedented what they're doing in Congress right now.
That part I haven't talked about. We just quickly covered I don't know if you've even seen this yet, if you're keeping track of it, but I'll drag it back over quick for your eyeballs, as I covered the YM and Q spreadsheet and looking at the trade. Have you seen these levels? Negative 40, negative 64.
Yeah, they're insane. Unbelievable.
So just as we were talking earlier, guys, right? We said if you were in a long, you had to absolutely exit it because we're over 1%, and look at what it did since I talked about that at the top of the hour. It's already turned back around. So, yeah. But I mentioned to everyone that I'm not personally trading the VA right now.
Yeah, there's just too many really. I mean, the volatility at 1%. We probably had a number of 1% moves over the last couple of weeks, so it's pretty tough.
It's 12%, almost 13% down in 2 trading weeks.
Wow,
how crazy is that?
That is crazy. Yeah, I've never seen.
You can stomach those and sleep at night, then more power to you. But that's not my game.
No.
So that's on the hold right now. So I'm just kind of got a bigger screen for everyone to look at here. True trend day to the upside, and just watching levels and watching the futures with the indexes at the same time. And as you warned, we are close to a potential limit up on that SPX, so we're keeping an eye on that too.
Yeah.
The futures did halt to the upside.
They did.
Open.
Yeah, just prior to the open, they were up 5%.
We see the YM was froze at 4 in the morning my time. They didn't let it go up any farther. It looks like NQ was also limit up for a while. So they hit the 5%, which is what they freeze overnight. Interestingly, I don't think the ES did as well, but then they let it trade farther, which I thought was interesting. So I don't know if there's like a time limit, because they all froze here around 6:30 Eastern. But then did it break above it? No, it never did. It wasn't until the open, so they did. There was the 5% limit on all of them. But I think it actually said like 5.3, which I thought was interesting. It's like if they can't do 0.3% math, there's trouble.
Yeah. Yeah. Well, I think it technically it has to trade above 5% for a certain period of time, and it just got away from them. So in a really fast moving market, it could go 6% before they actually freeze it.
Oh, it was the NQ. That's what it was. The NQ kept moving, but the other ones were froze. I'm like, I thought they froze all of them at the same time, but apparently not.
No, it's for each individual futures contract. So if it doesn't hit 5% yet, they'll keep it trading.
They let it keep going. It's just, I guess they normally hit at a similar time. That's probably what I've seen, where it just happened that it turns out that way.
Yep.
All right, we'll bring that back over. Stephen, we did run through it. It is the SPY minus VIX. I'll pull it back over quick if I can find it again. Where did I put it? Boom, boom, boom.
If you guys didn't see what was going on yesterday, I don't know if you even heard about this. I didn't have a chance to. I did a video on it. I don't know if you saw the video I did on YouTube yesterday.
I did. I caught it late last night, actually.
All right. I sent you the PDF on Slack there. If you want to bring it up, we could discuss it if you guys are interested. Steven says, still looking for a bottom? Not here. I don't think we're going to hit a bottom in the Dow until we hit around 15,000. Actually, if you want to bring up a weekly chart of the Dow, it kind of shows up real nicely before we get into this.
Sure.
This bill that's pending here. Yeah, this is not where I don't believe we've seen the bottom just yet. The fact that we're up over 1,000 points this morning has nothing to do with a rebound in the market. It's just more volatility. So yeah, Scrooge out there or whatever. All right, I kind of mixed two words together. I wasn't quite sure what that was. All right, so we got down to the top of that. Yep, that trend line right there. Hit that, kind of bounce back above it, but the real support isn't until we get down to around that, just below the two double bottoms there. So if you draw that line straight across there. Yep, it's around 15,478. Is it 500? 15.5.
Let's add the price to it. 15,424.
Okay. So that's kind of like where I wouldn't be surprised if it dropped below 15,000 first, just to kind of scare the crap out of everybody. And then from that point, get a rally. Jim Cramer said too, he doesn't like this rally. Yeah. Well, he finally said something I agree with.
Dogs and sun is my comment there.
Yeah, that's for sure. So so 15,000 is my target. I think we're going to get a bounce from there, just like we talked about in the 1929-1932 playbook. That 15,000 area is 50%. 50% of the entire market. So we're very, very close to 30,000. 50% of that is right around that 15,000 level. And wow, this has been the sharpest decline and the fastest decline of the market ever.
Oh, where did it go? And it's very potentially, not try to be a fear monger, but if this is worse, which we have the potential of being worse, I wouldn't be surprised at that either.
I wouldn't be surprised at all. In fact, I'm kind of looking, actually, based on this kind of, I guess I'll preface this by saying that these type of events typically just don't go away. There's something underlying even beyond the health situation that everybody's experiencing, but that has really accelerated this. We knew that, you know, there was trouble in the economy long before this. So my target is actually, okay, this is the if we do go into an extended bear market and we're following the 1929, 1932 playbook, we may be hitting 5,000 on the Dow.
That's what I was just going to find that.
Yeah, you got to go way back to find that. It doesn't even show up on the charts. I mean, look at that monthly. The monthly does not look like it's done.
Right.
Yeah.
Yeah, I can't even get it on 20 years, so I'd have to make a new deal. But yeah.
You can go max on that. I think there's a max setting.
I don't have it in my list.
Now go to customize list.
Oh, you're going to make me do work now.
If you want to. Just tell me to go to hell if you don't want me to.
Oh, no, Dave. We don't do that. I can get rid of some tick charts. Oh, speaking of tick charts, do we have... He is not on. Member was emailing me last night that he might join today, so we'll keep an eye out for Isaac. Because Isaac has got a 2,000 point tick chart and a scalping strategy he's been very successful with. He wanted to share with people.
Oh, interesting. Okay, cool.
He's available.
See how they can do with that. Because
oh, where did it put it? Scroll
it's
down.
probably down at the bottom now. Yeah.
There we go. All right, bring in the data, boys.
Yeah, look at that. I mean, it's barely even, you know, so you're talking about, well, that was 1600. That was back in the 87 crash, right?
Yeah,
So,
here's 87. Look at that comparison.
It looks like a blip. Looks like a little, it's a pimple on the face of the chart. Crazy. I mean, 2008, 2009 at this point. I mean, if we break those two lows, 2008, 2009, we break that low, man, all hell's going to break loose, right?
Funny, I still have this this trend line. This one might come into play then, Dave.
That's the one I'm looking at.
Yep.
That's it. Yeah, that's it.
And that's at the 5,400 level, give or take.
Yeah.
So
And
there's
that's not even on a, I mean, that's not on a log chart, but I mean, you can see how dramatic this decline is compared to every other decline that we've seen. It's just amazing.
So if anything, it may pause.
15, I think, yeah. In the chart from 1929 to 1932, it was a 50% break. We rebounded about 50%, which would bring us up to the 22,000 level, which is right where you have that line there. So if we do hit 15,000, we'll probably bounce up to that 20 to 22,000 level. Now the next line up, you have a 22. Yeah, that's about, that would be 50% rebound. And it's also, remember that was previous support, so it would act as resistance now.
Mm-hmm.
And then we'll continue to go lower, I think. In fact, the next leg down, if you're an Elliott wave theorist follower, this is just the first wave down. The next wave down would be worse. So we'd go from 22 probably down to 10 real quick. Real quick.
Here's the Great Depression.
That was, yeah. See, that first big break right there was 50%. That's perfect. Yep, that first big break right there is what we're looking at right now, I think. And then that's the first month, and the second month we went even lower. And that turned out to be, that would probably, if we compare it to where we are right now, that second month down is probably going to be the 15,000 area. Yep, that one right there. That's 50% of the previous market. Then we had a 1, 2, 3, 4, 5, about a 6 month advance rebound, which was 50% of that previous leg down.
Boom, 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 boom.
And then we went 85, I think it was 80 to 90% down. Just kept stair stepping.
Interesting. That's
See, the bars on the monthly chart there are huge compared to the previous ones.
right. Yeah. If I did this, you probably would have no idea.
Yeah, you could say, hey, that's our market.
Look at where we are. Doesn't this look familiar?
Yeah. Voltaire, did they have limits before? Yeah, they instituted in 2008 during the financial crisis.
Limits at this time? There was no limits back then.
Oh, back in the 20s? No, there were no limits. They did close the market for a couple of days.
Which meant physically close the doors.
Yeah, and nobody could trade anything. But yeah, doesn't it? I mean, that looks real familiar right there.
I'm taking a picture of that.
Yeah, I think I'll do that too.
How did I screw you up? There you go.
Okay, yeah, I think you did. But that's okay.
Take another one. Everyone wants a picture of that, grab it.
Yeah. Yeah, that's a beauty. So Steven says, I guess that kind of a pullback would blow Paul Mampley's $100,000 out of the water. Who's Paul Mampley? Mampilli, hedge manager? No. Well, no, I mean, I don't know what his time frame is on that, because after this depression takes place,
hyperinflation.
We'll go into hyperinflation. I mean, we may see the Dow at 100,000 in another 3-4 years, but in the meantime, we're going to get a 90% crush. Oh, now you really messed up your chart. You're going to be scrolling up forever.
That's okay. I'm just looking at all the comparison to that and how far we got to go.
Oh, Steven says he's saying it's going to start in the next couple of months. Well, who knows? I mean,
that's that's the thing that is interesting about that. I like that you said that, Steven, because just like we're dropping faster, everything is accelerated. So it's very possible I could see that we go into the hyperinflation faster than we did before.
That's quite possible, but if you think about it, 80% of the advance that we've seen since 2008 has been because of stock buybacks.
Right.
So where's the money going to come from to drive the Dow to 100,000? It's not going to be profitability. It's not going to be stock buybacks, unless the government goes in and actually starts buying up stocks, which they said they would do.
Right. That's on their table now, right?
Now it's illegal. It's actually not in their charter. The Congress, the charter that the Federal Reserve has says that they cannot buy stocks. But guess what?
They have a pen.
They do have a pen. Basically, they're going to ignore. They're going to ignore the law. And they're going to justify it by saying, well, they can only buy securities, treasuries and securities, and they're going to back the stock purchases with treasuries. So they're kind of skirting around it. And he said it's going to be fast. Okay, let's take a bet right now. Who says, let's take a vote rather. We're not going to bet anything.
I'm going to get 100,000.
Yeah, who says it's going to go to 100,000 before it goes to 5,000?
Yeah, let's see. I can probably do. Watch this. Okay.
I'm going to do a Twitter poll. The only reason I think it's not going to happen is because we're in a deflationary recession right now. After we get out of this deflationary recession, that may happen. But like you said, though, Dan, this is accelerated. Everything is accelerating faster here. The decline is fastest on record. I mean, look what happened to oil. Oh my God, from the mid 60s down to mid 20s.
Oh, and you know what I heard today about oil? Did you catch this one? Oil might go negative.
What?
Yeah. There's actually an article. I'll have
They're
to
going to
find
give it
it.
away?
Apparently. I don't understand how that would work, so I need to read that article, but I don't know how you can sell oil at a negative.
Yeah, I know. Hey, Stephen, if you have a link to like an article or something that he wrote or wherever he said that, a video or a Twitter feed or something, just let me, put it in the chat here. Let's take a look at it. I mean, heck, anything can happen, right? And there was an interesting, Macro Voices had a terrific conversation with Luke Roman yesterday, and he was talking about the fact that, when you're pumping billions of dollars a day into a currency, it is no longer a reserve currency. It just can't be. It can't be a reserve if you're pumping billions of dollars a day into it. I agree. I think that's.
All right, we got your poll is live up there.
Oh, yeah, that's cool. All right, I'm going to submit my vote.
It is anonymous, so I won't know what you say.
Like
this is my first time using the polling feature. It's kind of slick.
True voting. It was pretty cool. Yeah, it popped right up on the screen. That's nice.
All right, 3 of you left. We'll see who's paying attention. 62% of the voting is in. Now I feel like the news guys. Because it is an election year. Oh, we got 2 left. We got 6 out of 8 states reporting.
And probably some countries are.
Right, there we go. We got 6 out of 8 countries reporting. That's what we're representing here. I wish I could see who voted and who hasn't. I'd give you a hard time.
Yeah.
All right, guys, I'll close it out if maybe a couple people had to walk away. Steven's got the link there for Banyan Hill.
Yeah, taking a look.
And so, Dave, what do you think the poll result is? You can't see it, right? You only saw your vote.
I can't see the results. I could probably dig around. No, I probably can't. I keep this. But I'm going to guess that everybody thinks that it's going to be 100,000. I'm just kidding. I don't know. I really don't know. I'm contrarian. See, I'm contrarian in nature.
The majority thought we're going to 5,000.
Yeah. So
5 out of 7 of you, but 2 of you are optimistic to the 100,000.
Okay.
I'm probably one of the votes. I didn't vote, so maybe that I don't know if they counted me or not.
Oh, okay.
I can't.
Yeah, I mean, who knows? It could go either way, to be honest with you. My impression is that we're going to see the deflationary recession first, so we're going to go to 5,000, and then we're going to go to 100,000. Now, that would be an amazing run.
Yeah, that one would make sense.
That would make an unbelievable run.
Yeah, if anybody's sure about the timing, Stephen, they're in the wrong industry because you can't time this. That's for sure. We just know.
God, we have trouble enough timing the tick charts. We're going to time this thing. Yeah. So he says, Banyan Hill says that, what's he saying? I mean, I do understand the argument that things are looking really cheap, especially for oil. The last time oil dropped from 120 down to the mid 20s was back in 2008. That was I think it was 2008. It was a pretty dramatic decline. I don't get this. He doesn't say, oh, unless it's in the video. Is it in, oh, you know what this is? Banyan, this is an advertorial. They're trying to get you to subscribe to their service, Stephen. So what it is, I understand, yeah, maybe they might be right, but the problem is that they do have an agenda in trying to sell you their stock picks. So, they might be right. They might be right. I don't know. But they do have an agenda. They're trying to sell you their stock picks. So just take it with a grain of salt. Just take it with a grain of salt.
All right, so
If they said that if it was a legit, this guy, is he a hedge fund manager? Because Banyan Hill has got to be one of the properties of Agora Publishing. Agora Publishing, because it looks like one of their things. Yeah, they're at Delray Beach, so that's Michael Masterson. I've studied these guys for a long time. Their marketing is absolutely fantastic. I don't know who this guy is. He's definitely not a mainstream hedge fund manager. He's a marketer, basically, like we all are. I mean, we all have to market, right? But in this room, we only tell you what we don't have anything to sell in this room. We only have our opinions at this point.
he's a 50-50 guy.
Yeah.
Says his dad used to follow him.
Okay. Yeah, he's with the Agora Publishing, and he's probably with the Michael Masterson and I think his real name is Michael Ford. He went by a pen name for a long time. I think he wanted to stay out of trouble with the FTC and the SEC. But anyway, hey, if you got that PDF, let's bring that up because this is really cool stuff. We'll get this and then kind of go over this real quickly. This is a draft. It's a draft. It's not law yet. It's a draft though of the emergency and recovery assistance for American consumers bill that's going through for this health emergency. Ms. Waters, who introduced the bill, is the chairwoman of the Financial Services Committee in Congress. She has drafted this. We don't know if this is going to be the final bill or not, but I want you to take a look on page 4. Page 4 is the most important because what it's doing is not even hiding the fact that they're going to be using a digital currency to send out to everybody for the stimulus. Line 1, number 1 is a digital dollar. And they're talking about a digital ledger. Now, it doesn't necessarily mean they're using DLT, blockchain, or cryptocurrencies in order to do this. But when you scroll down to number 2 there, it says digital dollar wallet. This is the clue that we have that this is in fact some sort of stable coin, Fed coin, cryptocurrency coin of some kind. They are not going to use the word digital dollar wallet, those words, unless they're talking about some sort of blockchain, digital ledger technology, because otherwise they wouldn't have to mention that at all. If they wanted to deposit dollars into your checking account, they wouldn't need a digital dollar wallet. It would go directly into your checking account as a direct deposit. So what they're talking about here is that the digital wallet is going to be maintained by the Federal Reserve Bank on behalf of any person that represents holdings in an electronic device or service. So they have backups in custody of this new digital coin, this new Fed coin that is a cryptocurrency that's going to be on an electronic device that is storing digital dollars. And what they're going to do, if you continue to scroll through there, number 4, pass-through digital dollar wallet, means a digital dollar wallet that is going to be maintained by a member bank. Now, most banks in the United States are members of the Federal Reserve System. So
I had a question for you on that part for sure, because I was looking at that last night.
Yep.
And that's the one part that I don't get a warm fuzzy about is the member bank side of it and being the Board of Governors and the Federal Reserve System, which is actually a smaller subset of banks, isn't it?
There's 12 banks that are part of the Federal Reserve governors, the governors of the Federal Reserve System. So you got San Francisco, the Federal Reserve, you got the Chicago, you got
right,
Texas, but it's Houston.
Yep, there's one in Texas. Minneapolis has one here.
Minneapolis has one. Boston has one. New York, of course, is one of the biggest ones and has the most power. So those are the governors of the Federal Reserve banks across the country. There's about 12 of them altogether. Of those, every single bank in that region is a member bank of the Federal Reserve, Federal Reserve System. They're all in the Federal Reserve System. The only ones that are not in the Federal Reserve System are the credit unions. So you get some very, very small local banks that maybe aren't part of it,
Sure.
or the credit unions. But so part of this is that they will maintain a digital dollar wallet on the behalf of a qualified individual. A qualified individual is someone who has as it says here, is any individual other than a non-resident alien. So if you're an illegal alien, obviously I'm not going to give it to you. But if you are an individual, and they're not talking about companies, they're not talking about banks or anything else, they're talking about people who have a bank account. This instructs, if this bill passes, it instructs the bank, the Federal Reserve System, to set up a digital wallet, pass-through digital wallet, that would sit right next to your checking account in the bank that you do business at. So if you have a checking account, you're going to see another entry there if you go online and take a look at your account, and I think they even say what it's called. If you go down through there someplace, no, I think it's up farther. It's back in that original section, I think it says something about you're going to see it named the federal, no, up
higher?
Yeah, right there, right? Hold on. No, one more. Go up a little bit further. That's up top. Now, let me see if I can find it on mine. I'll go to the line. Because they actually tell you what it's going to be called when you look at your checking account. They actually have a name for it.
Yes, they're talking stimulus payments here. Declared March 13th. Stafford and COVID-19. Unemployment rate. 3-month average. Amount of payments. So here's where they're talking about what you're going to get. So, and this is basically for every U.S. citizen.
Yeah.
Go it that way. So if
all
you're
right,
over 18,
go to page 7, number 3 is also interesting, line 3. So this is how they intend to pay you.
Direct deposit, including the digital wallet. Yep.
First, by direct deposit. So they want you to do this first. So that's number I, line 3, first by direct deposit. So the Internal Revenue Service shall make the payments required under paragraph 1 first. So they want that to be, they don't want, that's their, what do you call it? That's a priority. They
Yep.
want it to be by direct deposit through this pass-through digital wallet. Number 2, double I on line 8, otherwise by check. Right. So they're like, no, we want direct deposit through this digital wallet, otherwise by check. So basically what they're saying is that, okay, first of all, it's in your best interest to have that deposited directly into that digital account at your bank that will sit alongside your checking account. And you could probably go to the bank and just say, hey, I'd like to withdraw the 400 Fed coin that I just got in dollars, and they'll give you the 400 bucks or whatever.
Oh, and guess what? Look at what's in sections 4 here. So if you want to get your payment that they make to you, when do you have to wait to do it? You know, normally how long does it take when you deposit someone's check? Shall be available for withdrawal on the same day.
Same day. Wow. Yeah. That's cool. Because it only takes a few seconds to actually transmit XRP.
Right.
I had to throw that in there because people are saying, well, is it going to be XRP? Is it going to be something else? Really, it doesn't matter because this is incredibly bullish for the entire digital asset space.
Yeah, they haven't defined a USDC yet, Stephen, so we have no idea under the covers. But as Dave just said,
Yeah, we don't
It'll
know.
help the entire crypto infrastructure because it's
The
becoming real.
Yeah, I mean, and you know what? The other interesting thing about this document is that they did not hide the fact that they were going to do digital payments using a digital pass-through wallet. They put it right in line 1. They didn't bury it down in like page 42 at the bottom footnote saying, hey, we're going to create digital wallets at everybody's banks where you can access these funds. They put it on line 1. It just blows my mind that they would do this. Whether it's a USDC coin or it's a stable coin that the Fed issues, they have to have a ledger in order to do that. And we know that the most stable ledger in the world is the XRP ledger. There is no other ledger. They could not do this on the Bitcoin ledger. They couldn't do it. Ethereum would blow up. Ethereum's ledger would absolutely blow up. Their CryptoKitties have taken so much of their, energy. And imagine trying to send out. Now, I figured that there's probably approximately 304 million people in the United States. 82 million are under the age of 18. So they're not going to be eligible for or they are eligible actually. They're going to pay them $1,000, but they probably don't have checking accounts. Of those, 24% don't have any checking account or bank. They're unbanked. They just don't have a checking account. So I'm figuring about 100 million checking accounts that they're going to create these digital wallets for. If they're sending out $2,000 per person, that's $1.2 trillion per month. You can't send that many Bitcoins and have them settled the same day. Oh, there it is, pass through Fed account. That's it.
Name, yep.
So that's what you're going to see. You're going to see something about a Fed account or pass through Fed account. That's it may not be labeled that by the time it gets down to your bank level, but that's the deal. That's what it's going to be called. Now, credit unions, it did mention in there that credit unions and others who are not part of the Federal Reserve System are able to sign up for this so that they can have that pass-through digital wallet set up for them without fees. So they're going to allow them to come into the system and not charge any fees. Yeah, there it is right there.
Yeah, I saw it earlier too. Yeah, credit unions, yep.
Yep. And permit state banks and credit unions that are not member banks open pass-through accounts.
So riddle me this.
Cost reimbursement. So they're going to do cost reimbursement for it.
So what else is happening right now in this country? Did you get your letter in the mail yet?
About, the census.
Yes. Guess
what?
And did you complete yours?
Yes, I did.
How did you complete yours?
Online.
Online. Have you ever done that before?
Never.
So they are now getting online people completing. So guess what? You can be counted. Where might they need to count people for generating these accounts? That just like jumped in my head because I just did it myself last week and I got the second notice saying, oh, hey, just in case you can go online. If you wanted to do it by paper, you could, but this is the first time that I've ever seen completing the census online, which would funnel right into, this will start 2021. Guess what? They're going to have an exact count of people that are doing it online.
Absolutely. Absolutely. So they had 10 years ago during the last census, they did not have this, right? I mean, they did not have anything online.
They have interest in here.
I actually worked for the Census Bureau in the 1980 census. I'm going to say it's 1980. And I actually had to go door to door and knock.
Nice.
I was also in charge of going to parking lots and knocking on truckers' doors when they were parked in the parking lots and trying to find homeless people. That was fun. A little scary sometimes. It was fun. So do you think this is how they will pay back the deficit? I don't know. I mean, the deficit, I wouldn't be surprised. I mean, they're printing $4 trillion a day just to be able to support the banks. They're doing billions in repos and purchases of securities and treasuries. I could see that the federal debt could probably jump to 100 trillion by the end of the year. It's 23 trillion now.
Well,
And this is monthly, right? These payments are monthly, so $2,000 a month. That's 1.2 trillion a month, and it goes until. And this is kind of interesting too, because I saw another video this morning that talked about the fact that the stops when the unemployment rate gets back to the level it was at the time that this was created or passed. So if we're at 3.5% unemployment rate right now, and we jump to 20%, which a lot of people think we're going to jump to, they have to get it back down within 2% of that 3.5%. How long is it going to take before we get back down to 5.5% unemployment rate? It could be a year or more.
Right.
And that's how long they're going to be paying us out.
Well, look at, there was a similar thing. Look how long the last market, it was 10 years, so you just said, to get back to regular? Exactly.
Yeah.
I'm scrolling and listening at the same time, so sorry if I repeated you.
That's okay. And it took 20 years, I believe, 25 years, or maybe even 30 years for the 1929, 1932 crash to go back up to those levels. So this could be a very, very long time. And so I don't think it's going to pay back the deficit now.
Yeah, well, think about just the theory of that, right? We can never pay back the whole deficit because that means that no one has dollars.
Yeah. Yeah, that's true too. Yeah.
We can never have a zero balance because the Fed always has a zero balance. They just make up money.
Right. And so when you think about the debt, the current debt at 23 trillion, the interest that's added to that, and the unfunded liabilities, those three together would easily push us to 100 trillion in debt. Now the deficit, if you're talking about the trade deficit of 1.5 trillion every year,
that we could fix.
That would be affected for sure. That might actually end up going to zero. Well, because we're not going to be, we probably won't have a deficit anymore. We're just going to have a supply chain issue, and we have to start producing more in the United States. There's no doubt about it. We have to. Anyway.
Yeah, this is exactly what we need to do that, right? And start having more manufacturing in the U.S. I think that's a great starter for that, and it can only do nothing but good for this country.
Absolutely. Yeah, they have to do that. Otherwise, we're going to have the supply chain constraints are going to be. We're probably still going to have those for a very, very long time. And this is maybe a wake-up call that we need to bring manufacturing back to the United States. And I think every country is going to have to ramp up some manufacturing of the least essential items. Got to have it.
Right. It just shows the trouble in the system where everyone should at least be self-sufficient to a certain level, no matter what country you're talking about.
Yeah. All right, guys, we're getting to the top of the hour. Anybody have any questions? Let us know.
I'll officially share the results with you. There you go. You can see them.
Oh, nice.
We saw that earlier.
Well, I like the optimism. I like the optimism of the few people that voted for 100,000. It may happen. Who knows? We have to kind of take it one day at a time because every day changes. Yeah.
Well, they'll have to figure it out, right, Stephen, as affordable manufacturing. I hear what you're saying, where it was always cheaper to go to China. That's going to absolutely be part of the equation. I agree.
Yeah, that's why manufacturing left the United States in the first place back in the early 80s.
Yep.
It can be done, Ken says, as a manufacturing guy for 30 years. Awesome.
Ken, you're hired.
Yes. Absolutely. I think that Ken can shed some light on this, and he's got his ears to this. If you don't mind reporting back every week, Ken, let us know how manufacturing is going and the state of the state of manufacturing in the United States, that would be valuable information.
Well, there you go. Then Stephen knows it.
Yeah.
Perfect.
Awesome. What areas, Ken, are I think most needed in manufacturing? If I was going to start a manufacturing company tomorrow, what areas are the most in demand? Toilet paper? I don't know.
Kimberly-Clark went through the roof, I believe. They're a paper manufacturer.
Yeah. Bidets are very popular now.
Yeah.
So, never really caught on in the United States, but there's plenty of paper making capacity. That's where I'm from. Okay. So if you were going to do something else, where would you look? What kind of manufacturing would you get into? Not that I'm going to be setting up a manufacturing plant tomorrow, but it'd be interesting to find out your perspective.
Yeah, where would be the sweet spot? That'd be interesting. Would it be electronics? Would it be hard goods? Hard lines, soft lines, all the different consumables that everybody has. It's an interesting take on it for sure.
The electronics would be probably an area because most of it's made in China now, right? I mean, all the cell phones and everything.
Right. Good to see you, Voltaire. Thanks for joining.
Hey, take care. Yeah, I mean, electronics makes sense. How about building materials? There's a lot of building materials coming out of China. I mean, most of the stuff they stock in Home Depot is out of China, isn't it?
Start with assembly and then vertically integrate to build subcomponents.
On electronics, you mean, Ken? There was a manufacturer of speakers. I think a lot of speakers are made in China too for sound systems, and I don't know where Sonos is made. I wonder where Sonos is made. Probably in China. I mean, almost everything is in China when you think about it, right?
Right.
My brother-in-law used to work for Becker Electronics in Oneonta. They made speakers.
Less technical to get started. Yeah. Electronics wouldn't be the easiest entry, right? Because there's obviously a lot of knowledge that would be needed to create. You start talking capacitors, resistors, transistors, whatever it is at an electronics level.
Yeah.
I just think about my dad's basement. He worked at electronics companies and he worked at Panasonic and he was a big phone person. So I always saw the interesting stuff from oscillators of digital stuff way back when.
Oh, yeah, that's cool. Well, I can reach this.
Dave's falling over.
When I was 18 years old, I manufactured this.
What is that? You got a putter?
It's dusty. No, what it is it's a duck.
Oh, I see it now.
It's a duck, and
I remember this.
Wheels. It's got wheels on it.
That's
and
right.
You have this handle, and you can walk it just like a dog. And see now because of the health thing, which we won't name, they're saying even your pets can carry it. So now you can get I won't say it, a virus-free pet.
And walk them around. There you go.
Walk them around. When I sold those when I was like 18 years, I manufactured them myself. I sold them, and there was a gift shop in the area that had a store here and it had a store in Cape Cod, and he bought like 1,000 of them. He put 500 in his store down there, and he had 500 here. He didn't sell as many here, but at Cape Cod he sold all of them out. He sold them all out in a week. He came back, he brought more stock from here and took it down and put it into his store in Cape Cod. But I sold thousands of those. Just that I was painting them, hand painting them by myself. I mean, it took me forever. I mean, I was up till like 2-3 o'clock in the morning manufacturing those things when I was 18 years old. It was so much fun though. It was
now you can hire a bunch of kids and relaunch that business because people need to walk their duck.
Yes, people need to walk their duck. Guys, magic wand walking duck toy. Oh, I like the magic wand thing. But yeah, it was a lot of fun. The parts were cut out by the association of what they called at the time the Association of Retarded People. I think that's politically incorrect these days, so they have another. But it put people to work doing millwork. And so I cut out the paper parts and I gave it to them. I told them this is what I wanted, and they cut it out for me and delivered them to my home. And all I had to do was paint them and put them together. One of the buyers was the chief medical officer of Walter Reed Hospital in DC
Wow.
Medical Center, and he told me that he bought it so he could walk it in his office as stress relief.
Everyone needs that now too.
Yeah, multiple purposes. Anyway, it's 11 o'clock, guys. Thank you so much for joining us again today. How's Thursday looking for you?
We're good to go.
All right. Market's changing all the time, guys. Heads up.
Yep. Be safe out there, and we'll catch you on Thursday. Any questions, you know how to get a hold of us.
All right, guys. Have a good one.
Bye, guys.